What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 27, May 16th, 2023. We made some trades today, so let's get into it. So let's start our analysis at the market open at 9:30 this morning. So we initially had a sell-off. We pulled back into the zone that was established from the pre-market. We created a double top, and then from that point forward, we had a lower high a little bit further down, and then we pushed down a little bit. But then look at this. We had a big, huge, sharp swing all the way back to the upside to retest the top of the zone that was established in the pre-market. So this started to set up one of my favorite setups, which was the zone play, taking it from the top and shorting it back to the bottom. So on trade one, I got in a little bit too early, but I had an opportunity to get out at break even. So I took that opportunity. But then on trade two, I saw the same idea for trade one starting to come into fruition. So I took the same trade again, and I was able to take the trade from the top of the zone, and then I took profit at the bottom of the zone. So after that happened, we see this lower high get formed and retest the bottom of the zone. So that right there is a typical breakout retest, which is a price action pattern that you see very often in the market whenever a breakout of a zone is confirmed. So you'll see a retest when that happens. So that led to a huge swing to the downside, which started to set up one of my favorite setups, which is a downtrend reversal that has a higher low established. I look to go long somewhere near the support level of the higher low. So that's why I drew the support line right here. So notice when prices came back into this level at 3, I went long. Closed it out for a little small break even loss because I saw prices moving against me and I wasn't really quite sure if this higher low would hold up. And that was because if, let's zoom in a little bit. So look at this whole formation. So yes, we do have the higher low right here, but look at how if we wanted to, we could draw a little minor bear trend line from the top of this swing, connect it through this lower high and extend it down. So at that point in time, I was seeing the bear trend line kind of keep prices within that area. And I know from my previous days that usually when you see a bear trend line, even if you do have a higher low, you don't necessarily want to fight it. So I got a little bit shaken up right there at 3 and I closed the trade out a little bit too early. But I would say that's a good decision because at that point in time, it looked like it was more likely that the market would continue down because after seeing a big, huge candle like this to the downside, that's telling you that it's momentum in the market for the sellers. Now, will they immediately have follow through after a candle this large? Probably not, but more than likely throughout the rest of the day, they'll probably move down. So in my mind, I was thinking that this downtrend reversal with a higher low that gets established could probably lead to one good trade, but not a trade that you hold for the rest of the day. So knowing that this potential setup had a probability of getting reversed as it did a little bit later. What time is this? At 10 o'clock, we'll get to that. So knowing that that would happen more than likely, it kind of shook me out of that trade a little bit, but I think I made the right decision on 3 by getting out early because based on what was in front of me at that time, it just looked like the chances of me being profitable on that trade were decreasing, especially when you looked at the fact that both of these candles were red and then they started to break down below the support line. I was like, nah, man, I can't hold it. So, hey, I think I made a good decision on that one for trade 3. Now, for trade 4, I just think right here, I was a little bit too impatient because, yes, I did see this green candle and then I saw prices break back above support. But maybe I should start waiting for prices to close above the support line because if the level of support is important, it's probably going to be a whole lot of back and forth around that level because you still have people in the market that are trying to sell because of, I guess, this swing high, this lower high, and then this lower high that follows. So it's still sellers in the market, but more than likely it'll probably be more buyers over time once everybody realizes that the higher low was created and that the support level is being respected. So I think at trade 4, I'm just a little bit too early on that one. So the lesson from that is to wait for a close above your desired support level and then go long. So on trade 5, I come back with a similar idea to what I was thinking at trade 4, but I'm just too early. Now, yes, I did see prices break back above and close above the support level, so I went long at the next candle. So in this scenario, my line of thought needs to either be hold the trade for the full stop loss once you feel like you've seen the confirmation that you need for your setup, or just wait for a better opportunity. Because for me to get into the trade once and scratch it, and get into the trade twice and scratch it, for me that's okay, because that's just how I move in the market. I like to probe the market. I like to get in for my entry. Then if it doesn't work immediately, I'll just cut it for a small loss before it goes all the way against me. And then if I see the trade start to work again in my favor, I'll get back in. Now, that type of method can work when you're only testing the market maybe once or twice. But testing it that third time just adds up the losses, because these are three small losses on trades 3, 4, and 5. But those three small losses almost make up like 80% of the gain that I had on trade 6. So those are eating into the profit margins. So taking just one little small, I guess, a probing trade, trying to really probe the direction of the market, just limiting myself to 2 of those per setup, I think will make a big difference and save me about what, like 7 or 8 points on average. So I think that's the lesson from lesson 5, from trade 5. Just even though I had the idea about the market going long, I still have to wait for the proper correction. I mean, the proper signals to show me that my direction is correct. Because look, it's still sellers in the market. You don't just want to disrespect the sellers. You want to let the sellers do what they do, and then when you see a bullish reversal signal, that's when you initiate the position. So I got that bullish reversal signal once this higher low got made right after the trade from trade 5. So the next candle over. So notice how if we come from this swing low, we connect through this higher low and then continue to extend it, it passes through the wick that was created right after this trade at 0.5. So that right there is the higher low. So then once you see a higher low that leads to prices breaking back above support, they close above support on this candle, that's when I went long on candle 6 and took prices back up to my scalp target about 21 points higher. Now on this occasion, I did have an opportunity to continue holding it back up to the support level from the last higher low that got created, but I really wasn't prepared for that type of move. I had an idea that it could happen, but that's just some food for thought. Like, hey, some of these trades could last a little bit longer. So that's just some interesting thoughts that I had about that whole series between trades 3 and trade 6. So let's continue on with our analysis. So eventually that down move did continue, and we saw prices have a 1, 2, 3, 4, 5, 6, 7, a 7 candle spike down to the downside, 7 candle bear spike to the downside. And then at 10:15 we saw our swing low and our pretty much our lowest point of that entire downswing ultimately get formed. So off of that, we created a higher low that led to another higher low. But here's what I did in this scenario that I think I need to improve upon. So let's look at trade 7 and 8. Trade 7 and 8, I shorted from the top of the zone in expectations that prices will come back down to the bottom, which is that's a solid strategy when you identify the zone correctly. But I think right here in this occasion, I was stretching the zone just a little bit too much. I would like to see more of a sideways consolidation movement before I draw a zone. Now, when I drew this zone right here, I drew it after we saw 1, 2, 3 candles. So I was expecting for, if this was the first touch, this was the second, this was the third, I was expecting it to come back up, create a fourth touch, and then see the downtrend continue to at least just test these lows that it made down here. So that was my line of thinking, but I think I drew the zone a little bit too early because I wasn't giving the market time to necessarily come back up and make that fourth touch and then completely confirm the zone. So I think I was jumping the gun a little bit too much, and that led to me misidentifying the market direction that I was looking at that time, because I know for a fact that if I didn't draw the zone, I would have saw the market completely differently, because I would have either been able to see that this was the higher low or that this was the higher low. Now on this specific day, I recognized the higher low once it formed right here, and that's what led me to getting out at trade 8, because I was like, okay, the other day when I shorted off of a higher low, it didn't work, so I don't want to continue to keep doing that if I know it doesn't lead to success. So that's why I closed trade 7 and trade 8. Trade 7 I closed because that was me probing the market, trying to see if they were going to hold up at the top of the resistance level, and they did, but it wasn't necessarily a complete zone at that point. So if it wasn't for me drawing the zone up here, I would have pretty much just been able to identify the same pattern that I saw from up here, which is my textbook setup, which is really what was so frustrating today, because I saw my textbook setup, but I didn't identify it correctly, and therefore it led to me trading it the wrong way. And we'll get into that from trades 9 through 11. But if you look at what happened right here, we created a higher low and I extended my support level. I could have did the same thing at this higher low if I extended my support level based on the close of the body from this doji or from the next candle next to it. Extended across, it lines up with that same level. So my strategy usually when I trade a downtrend reversal higher low established is to let the higher low get formed. I draw my level of support and I look to go long off of that level. So once this higher low was formed, or this higher low was formed, my level of support was drawn. All I had to do was wait for prices to come back down to that level and go long. So really, I should have been going long at this next higher low that also lined up with the channel line. So that makes more sense also. It's two different signals to identify the people that they should be potentially looking for long trades. So that right there is my setup down to a T, but I traded it the wrong way because I misidentified the price action. So hey, it's always important to make sure you first identify what you're looking at properly so you know the right way to trade it, because it's a lot of trading strategies that work, but you have to make sure that the market environment that you're trading in lines up with that strategy before you use it, because you want to make sure that you give yourself the highest probabilities of success. So that's what I learned right there on trade 7 and 8. Make sure you properly identify what you're looking at so you can trade it the right way. So after we see prices come back down to this higher low in the channel line, they push back above the zone, create another higher low above the zone. They didn't even come back and retest it. That's how strong the breakout was. And then from that point forward, they pushed up to retest the higher low level that we established a little bit earlier in the session. And then see, this is where I took trade 9, and this right here, this was just a bad trade. Now trades 1 through 8, all of those trades align with my trading plan in some way, shape, or form. Now trade 9 was just an impulse decision by me that I thought was a good idea, but it really only seemed logical in the moment. And here's what I was thinking. I was thinking that if we've been able to create a series of 3 higher lows, and then we push past the major level of resistance up here, I'm thinking that more than likely the uptrend has started for the rest of the day, and we'll probably try and come back up and test the top of the zone where we initially fell down from when the market opened a little bit earlier. So that was my thought process, but I think in that scenario maybe I was thinking a little bit too far ahead, because look at all of these other major levels on the chart that we had to skip to get to even thinking about the top of the zone. We had to pass this level of resistance, and the bottom level of resistance at the zone before we even get to the top. So I'm thinking that in that scenario at that time that we would have a great up move. But I think what I need to focus on is taking it from level to level. Think about what price action is doing now and how that corresponds to the level of resistance that we're moving into. What would be the most likely outcome based on the price action? So if we think about it from that perspective, going long at the top or near resistance isn't the best probability setup, because I'm just going long at higher prices. If you look, this is the top of the swing. My entry right here was at the blue triangle, so I went long not too far from the top of the swing, still within that general area, so I'm still going long towards higher prices. I thought that the opening price for the candle next to it would hold up as support, but that just isn't really the highest probability trade, because I've learned a lot that when you move out of a zone, come back to the next upper level of resistance, more than likely, instead of seeing prices push past resistance and just keep going with momentum, they'll probably pull back down to the zone that they broke out of and then retest that zone before they make their next move to the upside. So instead of going long at higher prices at trade 9, I need to think about going long at lower prices, because even though the long trade at prices like this does seem appealing, I just have to realize that over time it's just a low probability setup. So why would I want to take something that gives me a lower chance of having a profit? That's going against the grain. So when prices move back down to the bottom of the zone at trade 10, that's when I actually went long. And I had the same idea that I had from this higher low that got established a little bit earlier that we were talking about. And I was saying to myself, well, if we come back down to the bottom of the zone and the channel line, if the trend has already been up, we should bounce. Now that was the right idea, but I had that idea at the wrong level. Now at trade 10, I was able to get out at break even, so that's no problem. So then we move on to trade 11, and here's where I started to trade my setup the wrong way. So this right here is a downtrend reversal, higher low established. I did take 3 small losses on it, but eventually I was able to get my move out of it. So I look at it as being successful. Now on 7 and 8, I didn't trade it properly, but I didn't take any losses on that, just break even trades. So I don't look at it as too much of a negative. But 10 through 12 is where I started to kind of mess up a little bit. So 10 was good, that was the break even. Now 11, I had 2 different entries, but I just split up my contract size. So instead of the normal 2 contracts that I traded, I decided to take one. I shorted from this level of support right here, which, looking back in retrospect, the same way you don't want to go long at the highest point in the swing, you also don't want to go short at the lowest point of the swing, which up until this point, this was the low for that entire down move from this previous level of resistance. So don't really want to go short at the downswings either. So that's a mistake right there. But I split my contract size up. So I took one entry here and I took the next entry for the other one contract right here. Now here's what I want to talk about. If my normal entry size is 2 contracts, what would be the reason that would really make me want to drop down to 1 contract? It would more than likely probably be a setup that I see that I think is going to work, but I'm not really all that confident in it. But then I have to ask myself, if I'm not confident enough in my setup to trade it with my normal 2 contract size, then why would I trade it with 1 contract? Because subconsciously my mind is telling me that if I don't want to trade it with 2 contracts, then it's not really the best setup, because if you would trade it with 1, then why wouldn't you trade it with 2 if you think that the trade is gonna work? Subconsciously, that's my mind telling me, this trade is not gonna work. So I think that's something I definitely need to pay attention to. It's like, look, if you wouldn't put your whole contract size behind it, then it's really not a good entry anyway. So I think that's what I learned at 11 right there. I think, yeah, anytime I ever split my contract size up, it never really was the best setup. Because if it was the best setup, you would just put your size behind it and take it like a normal trade. So I was able to get out at break even on the first entry and then take a small loss on the second entry. So overall, just another small loss, but you don't want to really take too many small losses in one day, because if you add up what happened at 3, 4, 5, 11, and 12, plus the bigger losses, and 7, don't forget that one, plus the standard size losses I took at 9 and 12, that's just a recipe for not being profitable on the day. And if you guys see my loss limit, I actually hit it 500. So taking small losses like that over time, it will eat up at you if you can't trade your setups properly and get those good trades to kind of offset those losses that you took. So that's all that I learned at this whole junction between 10 and 11 and 12 also. Now let's actually look at trade 12 and talk about that, because my setup was the downtrend reversal higher low established, but I was trading it the wrong way. Because think about what I told you earlier. I look for a downtrend reversal, I look for a higher low to get established, and then I draw my level of support based on the body of the higher low. And when prices come back into that support level, I look to go long and take prices up to either my scalp target or to a swing target a little bit higher, because it is a potential probability that prices move higher for the rest of the entire session after a setup like this. So that's how I look to trade that entire scenario. Now what I did wrong here was I underestimated the power of support that the higher low had, because I saw prices have this big, huge downswing from this previous level of resistance all the way back down to retest the higher low. So I was thinking that, man, I really don't want to get in the way of this momentum, which is a logical statement. It makes sense. But I think that my idea about that should have changed once I saw this. I guess you could call it a micro double bottom, because if you look at where we started from at the top of the swing, once we come back into the zone, we push up right here, and then we come back down to retest it on this candle here. So we have a micro double bottom. We push up one more time and create really a triple bottom. Notice how the triple bottom was formed on a long tail candle wick that tried to break out of the zone, which is also the, excuse me, that's not the zone, but that's the support level. It tried to break past it, but immediately got bought back up. And then on the next candle following, it broke through the zone with clear intentions. It wasn't just a little push through the top of the zone. It actually broke all the way up through it. So that's telling us what the buyers want to do. So that right there is my textbook setup. I look for the support level to be respected and then go long. So in this situation at 12, if anything, I should have been going long once I saw the close of this long tail candle wick that failed to break out of the support level that was drawn based off the higher low. That right there is textbook me right there. And even if I wanted to get in a little bit early and be aggressive, I could have went long as soon as prices touched the support level on this green candle. And then if I just would have held that trade, my stop would have never got hit, because prices never even came close to breaking past support. They just barely tested it and then they moved up after. So that right there just comes back to trade identification. I think if I didn't have the zone up there, it would have, I'm not going to say it necessarily would have gave me a clear path to just see the proper setup, but it would have gave me an opportunity to at least see something different. So I think trade identification is super important, because me misidentifying what was going on at trade 7 and 8 eventually led to me making subpar decisions at 11 and 12 also. So that was a lingering effect that affected me throughout the rest of the session, and not just on that one series of trades. So I think that's why it's always so important to make sure that you make the best decisions, because you never know when it might come back to bite you in the butt. You think that it's only going to affect you this one time, but nope, it's coming back around to get you. So you want to make sure that you make the best decisions at all times so you can set yourself up for success. So overall, man, today I had some good and some bad. Like, I'm not just gonna say it was all bad. I made some really good trades at 1 and 2. I played the setup, I'm not gonna say perfectly at 3 through 6, but I did well enough to make profit out of those 4 trades. So I did okay. But then I kind of dropped the ball on the rest of the trades throughout the day, not because I was being stubborn. I was only stubborn on trade 9. Out of the 12 trades that I took, only one of them were really just a trade that was completely misaligned and nowhere in my trading plan. So 11 out of 12, I think that's okay, but it could be better. 12 out of 12. When it comes to taking your best setups, I feel like every trade should be your best setup. And if you get it wrong, okay, that's cool, but I shouldn't deviate from my plan at all. So 9 really just sticks out to me. But other than that, I think I had a decent day. The only thing that frustrates me is the fact that I saw my setup. It was just, I misidentified it. So I'm not really frustrated about today, because losing days, they happen here and there. You don't want them to happen too often, but when they do, you have to just roll with the punches and manage it the right way. What I'm really proud of today is the fact that I was able to respect my loss limits at 500, because you guys remember the past couple of losing days I had, I just let them get out of hand and out of control, and they went from 300 in losses to 500 to 600, all the way up to 900. And at that point, I made a decision to set my loss limit at 500 and never let my losses get above that, because it just sets me up for failure and makes me have to work too hard to make those profits back going into the future. And I don't want to make it harder on myself than it already is. I want to be my best enemy, not my worst opposition. So I think I did a good job by just taking a day that was negative and capping it and limited limiting my losses to a certain extent, because going forward in the future, that really just gives you more confidence. Like, okay, I had a bad day yesterday, but it's a reasonably bad day. I can bounce back from that if I make some good trades. So it really gives you less stress going into your next trading session. So I would say that overall, I just got to work on my trade identification. I was a little bit too excited to go ahead and box this zone up. It's just a matter of being patient, because I think I told you I wanted to box the zone up once we came back down here. So all it took was for me to wait for another 1, 2, 3, maybe 4 minutes, and then that would have showed me that, hey, maybe the zone wasn't as strong as I thought it was initially. So that comes back to just patience. Common market thing that we always talk about: patience, patience, patience. So I'm really not all that frustrated, man. I know exactly what I did wrong. I saw my setups, but I just misidentified it. So I just need to clean that up, come back tomorrow on May 17th, and just do what I usually do: trade my setups the right way, and I think I should be good. So overall, man, that's what I learned today. I appreciate you guys for sticking with me to the end of the video. I hope you learned something today too. I'm gonna get it in with my back testing sessions tonight and just work on taking my best setups and identifying them the right way. And then I'll come back here tomorrow on May 17th, Wednesday, 9:30 a.m. sharp, and we'll run it back. But until then, good people, take it easy.